Good morning, everyone. We welcome Dr. Miklesh. He is a faculty member in FIIB, Delhi, and he is an expert of faculty. He is one of the most sought after resource person in the area of finance and particularly with RStudio. He has developed a niche of teaching finance using RStudio. He got a YouTube channel with the name Miklesh Yadav and almost 100 videos are there. You can watch that. So we are really grateful to Dr. Miklesh for sparing some time and coming online for handling some queries from the second year students related to finance. So over to you, Dr. Miklesh.
Thank you, sir. Thanks a lot. Okay. Good morning, all. I hope you are ready with your queries. Now, talking about finance, generally, we are talking about research related with finance, right? So I have gone through the titles which I got from Sir, Dr. Neeraj sir. And in current juncture, like majority of the title which I have found in that particular title, the panel data may be suitable, as well as in some cases time series may be also suitable. Apart from this, 1 to 2 titles, in that titles I have found that there may be possibility of cross sectional data also. Now generally in finance, what happens, so these are all about your titles. Now talking about the research related with finance in current juncture, majority of the studies are based on macroeconomic variables and the impact of these macroeconomic variables on maybe a stock return, maybe the GDP of different countries. Apart from this, in current juncture, even in finance, some people are using or correlating this financial concept with, or financial title with corporate social responsibility as well as corporate governance. So it means in finance area, even there is a scope to corporate governance. Then generally what happens after that, we find the research gap in form of detailed literature studied, and then we can go for the further study, right? So these are the titles, or you can say these are the scope where we can go for, or where we can opt the title for the further studies. Now apart from this, one of the area in current juncture in finance, volatility prediction has been a very new, not new topic, but people are preferring to go for the volatility prediction. Apart from this, in any country the crisis happens, right? So either that particular crisis affects negatively or positively to any other country or not. So for that particular study, there is a spillover effect. So people generally, even in MBA or in PhD, people go through the volatility prediction along with the you can say along with a spillover effect. It means time varying correlation. Either let's suppose when you talk about 2007-8 Lehman brother case affects the volatility of, or volatility in India or rest of the countries or not. For that particular purpose, generally people follow the spillover effect. So there may be the possibility of this volatility prediction as well as the spillover effect. So these are the ground area in which one can go for further study in finance. So sir, these are the areas, sir. Okay. Apart from this, if anyone has any query related with title, they can go for that particular title.
Okay. Okay. Thank you, Miklesh, for this brief. Now I will invite second year students that you can start typing your queries in chat box, and then one by one we will take them. So the second year students, you can please type your query in chat box. Dr. Flows, is there, if you wish to say something by the meanwhile, the second year students will type. If there is anything you want to brief or set the tone of this particular session, Dr. Firoj?
Actually, at this time, sir, I don't have any query,
Okay.
but I'll request Dr. Miklesh that if he can have a few sessions
Mm-hmm.
on the research methodology, which is especially useful for the finance students.
Okay.
Because, sir, you know that we have certain lacking points.
Yes. Okay. Okay. So,
Certain lacking points in the research methodology, especially for the finance in our institute. So I'll request Dr. Miklesh that if he can a few sessions on this later on, not at this moment. So that would be very helpful for us.
so thank you, Dr. Firoj. There is a query from Shivani. Dr. Miklesh, you can read it in the chat box also. She is working, her objective is a credit rating impact on the FOB performance. And she have to use the ordinal profit model and panel data. So she want help in that using our studio.
Okay. Generally, I hope if Shivani is using, sir, can I go through the mic or should I write?
Yes, anything you prefer.
Okay.
At your disposal.
Okay. Okay. So as I have seen, the objective is credit rating impact on firm performance, right? So obviously the okay, Shivani, Shivani. Uh, Hello, Shivani, can you hear me? Hello.
Yes, sir.
Okay. So you have mentioned here, you want to use order probit model and panel regression, right?
Yes, sir.
So your dependent variable, do you have the more than two categories of your dependent variable?
No, sir.
No, generally what happens, the moment you talk about order probit model, right? So this order probit model is applied when your dependent variable is categorized, and even in that category, the category has to be more than two. Generally, we talk about probit model, logic model, like when
Okay,
we
sir.
have a dependent variable in two category and we say like 0, 1, then we apply probit model, right? You have mentioned here order probit model. It means you, for in order to apply order probit model, your dependent, the category of your dependent variable must be more than two. Are you getting me? Hello?
Yes, sir.
Yeah. So in that
Yes,
case,
sir. Yes, sir.
you can go for the order probit model. Apart from this, you have also discussed about panel data regression, right? So panel data regression means what? Like you are
Yes, sir.
using the categorized of dependent variable, or simply you have dependent variable, independent variable, and that is in ratio level data.
Actually, sir, I have data of Nifty 50 for 5 years and credit
Mhm.
rating, credit ratings of those 50 companies, and I have to
Mhm.
compare all these data to measure the variable used in determining the credit rating of the companies are same. And then second hypothesis is that is it is there any impact on the company's performance on of credit rating? So
Okay.
the
So
in literature review, I have read some papers where these models are used.
okay. So now when you talk about like you have used the credit rating, you have gone through for the 5 years, no issue. Obviously, if you have more than one, obviously the more than one company, right? So in that case, case, you talk about the panel data, it's okay. But of credit performance independent variable, right?
Yes. Yes, sir.
So your firm performance is not in category, right? So obviously that won't be the case of probit model. Now what I suggest you, if you take like firm performance, maybe there are so many literatures available for that. For firm performance, people may opt even for in form of financial performance, maybe in terms of return on equity, or so many parameters are there to judge for the firm performance. In this case, simply you can, what you can do, you can take the dummy variable as independent and simply go for the regression. Getting me?
Yes,
Hello?
sir. Yes, sir.
Getting what I'm talking about?
Yes, sir.
Yeah. And apply on the basis of dummy variable, apply the regression. If you have panel data, you can go for the panel data regression also. If you check if your objective is to check the individually of the company, then even the simple time series regression may be also okay. I
Sir.
hope you are getting me. So
Yes, sir.
it's crystal clear from your study that it won't be the case of order probit model in this case.
Okay, sir.
Okay. There is another query from Ankush. Ankush, please ask your query, and it's better if you can come on video also.
Okay, Ankush has written, I want to run Tobit regression in eViews, how to deal with dummy variable in Tobit regression using eViews. Ankush. Hello, Ankush.
No problem, Dr. Miklesh. You can reply because I'm recording it. We will send it later. We don't know whether the person is online or not. So you can please answer.
Okay. Okay. This option also. So in that option, when you go for like in quick, when you go for estimate equation, in that estimate equation, you can write the variable name, and in model name, you can find the options. So in that particular options, you can click on, there are so many availability of the model. You can find in Tobit also, and you can get or you can go for the Tobit regression. Apart from this, there is very like great command for the R Studio also. So you can go for R Studio also if you want to use this Tobit regression model then. So simply in eViews, if you want, then simply go for the quick, click on estimate equation, and in estimate equation, after writing your variable, you can find in the options, and then click on this. Then you can get the idea related with these eViews. Okay. Uh, Akash Singhal has mentioned in form of query, sir, how can I use RStudio to make trend in prices of crude oil, which can be correlated with events happened in the global market? In continuation, I think this is related to spillover you just talked about. Am I right? Akash.
Yes,
Hello,
sir.
Akash.
Hello, sir.
Okay.
Good morning.
Good morning. Now, talking about first and foremost, the first query related with trend in prices of crude
Yes.
oil. If you have RStudio, simply you are supposed to install T-series package for this, right? So apart this T-series, when you write plot.ts, there is command. For this particular, the command is plot.ts.
Okay.
And plot.ts, and then variable name, if you write, you can find a trend, right? You can find
Okay.
either, you can find the trend. Now the question is, either this trend is a stochastic trend or deterministic trend. For that, you're supposed to go through some like data. I have uploaded the video of this trend also, maybe in third or fourth video. So you can go for how to check in case of any confusion, right?
Okay. Okay.
Now the question
Definitely.
is, the second query along with this, you have put that which can be correlated with event happen in global market. So
Yes.
can you elaborate it in clearly?
See, there would be a trend in the crude oil prices, but according to which a prediction would have been made that if the prices would surge or decline, but that would not happen in the presence of any global event, such as any of the financial crisis, any OPEC meeting, or such as Aramco had a this supply breakout, due to which it affected the crude oil prices, even the coronavirus. So I'll be just defining that there was a trend in the prices of the commodity, but that actually failed because of the sentiments that were overpowering it. This is the idea about the study.
It means you want to evaluate the or effect of some event. Am I right?
Yes, exactly. Different events.
Different events, right? For if you want, if your purpose is to examine the effect or impact of event on any particular dependent variable, for that very suitable methodology is there, and that methodology is known as event methodology,
Event
right?
study, yes.
Yes. So event study, you can go and on the
You
basis
have
of that,
videos.
there are even I have uploaded the video of event methodology also. Even that is in very simple Excel. You can go for this on the basis of
Okay.
different window estimation, window period, and then you can find either there is a significant impact of any event or not. Is it
Okay,
okay?
definitely. Yes, sir.
Okay.
So, sir, is this related to spillover you just talked about, or it is something else?
No, it is not related with spillover. It is related with simply announcement of event and the effect of that event on your dependent variable, maybe in form of a stock return, maybe of GDP or whatever variable is there.
Okay,
A
okay.
spillover is something different. If you know, everything depends on your objective. What types of objective are there and what you want to do? Getting me? A spillover is
Okay.
something differently, like if anything happens, let's suppose simply in a very simple example, there is raining, right? And there is raining, water is coming in one room. Either this water is going through another room from one room or not. Simple. If your objective is like that, then you can
Okay.
go for a spillover. Like simple, if your objective is to examine the effect of Lehman Brothers cases in a stock return of, or you can say the stock return of Indian market. It means here effect has happened somewhere, like another country. You are examining the effect of that event on like your stock return. So a spillover that may be related with a spillover effect. Talking
Okay,
about
okay.
event study, in event study you are having some limitation in form of you cannot go for the maximum long period. Simply maximum you are supposed to evaluate for the 40 event window. Though literatures are there, 5 days before, 5 days after, 20 days before, 20 days after, 40 days before, 40 days after. So as per literature, maximum you can go for the 40 days back and after 40 days. That is one of the
Okay.
limitations in terms of your, you can say, this event study.
Which is not present in the spillover effects
Yes.
or spillover.
In a spillover, you can go for the entire timing, whatever, like 5 year, 10 year, it does not matter.
Okay, okay. Thank you, sir. Thank you so much.
Thank you. Supriya. Supriya has mentioned, my topic is relation of capital structure and profitability. I'm working with panel data. I have a doubt. Yeah, Supriya.
Sir, my doubt is that I am working on one independent variable and 4 dependent variable. And
Okay.
as I have worked on EVs earlier, there was I really had to compare individually with every dependent variable. So, is there any like option in our studio that I can combine all these dependent variables, because I am uh, showing them to be collected as a profitability. So can it be done on our studio?
Okay, Supriya, either you go for eViews or R Studio, it does not matter. The thing is that the moment you talk about combining, even in eViews or R Studio, you cannot combine. It means now you are having you are having 4 dependent variable, 1 independent variable. In this case, you are supposed to run 4 different model. Are you getting me?
Okay.
4 different model in the sense that dependent variable first with independent variable, dependent variable second with independent variable, and so on. It means you are supposed to apply panel regression 4 times, and then you can
So
check.
it cannot be grouped as one. It has to
No,
be individually.
yes, because this is the condition of test, that your dependent variable has to have only one. Getting me?
Okay.
So the number of dependent variable you have, the number you are supposed to run the model, right? My suggestion will be here in this case, kindly include some control variables also, because one independent variable, one dependent variable won't be, I think, won't be giving you the significant result. So better to include control variables in this case.
Okay, sir.
And,
Can you tell
and
me about more about control variable?
control variables maybe in terms of firm age, you can consider as this firm size maybe in terms of
Okay.
turnover, maybe sales, right? And you can
Okay, sir.
go
Okay.
you can go for R Studio also. I have uploaded the panel regression in R Studio also, so you can go through that if you want to apply through R Studio then.
Okay, sir.
Okay,
Thank you.
Supriya, thank you.
Okay, so we have last 4 minutes. If any questions are there from second year, they can ask. In the meanwhile, I have a query on behalf of first year students, Dr. Miklesh.
Yes, sir. Yes, sir.
Students will soon go for the summer internship.
Yes, sir.
One question that always comes, like what sort of project they can do there, what sort of data they should propose there, that this is we want to do. If there are any guidelines you can give on that.
Yeah, definitely, sir. Generally, I think that may be in terms of summer internship project, sir. Okay.
Yes.
So in case of summer internship project, in current juncture, people generally, what happens, people go for the mutual fund and different stock brokers. So one of the great advantages will be in form of technical analysis and fundamental analysis. So students can learn during their summer internship project in form of technical analysis and fundamental analysis, which is very important after completion of MBA, and that will be helping at the time of job as well as campus placement also. So I request to the students go for the technical analysis and fundamental analysis in detail, and they can forecast the stock prices also. So in order to forecast stock prices, maybe in form of mutual funds, and there are so many variables for that one can forecast. So that will be very helpful if they focus on technical analysis as well as fundamental analysis.
Okay, so that means these are the sort of the projects students can do now also.
Obviously, sir. Even being in home, what happens right now in our college? Earlier, this summer internship project is about to be start from April, but now it has been postponed, and each and every faculty who is teaching finance, the students have been categorized, and then the students have been assigned a mentor, and we are supposed to guide them through Zoom in form of the same type of project. So it will be also a kind of learning being in home, and that may be because generally in finance we are not supposed to go for the primary data. So obviously we are having every information is available in public domain in form of databases. So you can apply these databases in our research as well. So that may be helpful for the students as well as faculty members.
Okay. So Dr. Miklesh, Ankush is back, and
Yeah.
he requested that if you can send the link of your YouTube video. So like 2-3 videos you talked about the panel data in R, or about the Supriya's query or Akash query. If you can send a
Yes.
link of all those, so I will forward to all the students.
Okay, sir. I'll be sending you on your mail.
Yes.
Okay, I'll be sending you on mail.
Okay, I have one more query on behalf of second year students.
Yes, sir.
Some of our students wish to assess Capita online, but that is accessible only in our campus. So can you tell us some other software which is as good as Capita Line and free also, which they can access from their home, if you are aware of?
Yes. Capital Line actually talking about if students are willing to get the data of stock prices, maybe in terms of stock indexes, maybe the future, or maybe derivatives, they can go for the website also of concerned like NSE, BSE. Apart from this, if students are willing to get the data of GDP or related with all the inflation or macroeconomic variables, they can go for the RBI site. From RBI site, they can get the data which are available for this. Apart from this, I think we need Capital Line. So these are the data which one can go for this. But what I have found, majority of the titles I have gone through, so majority of the data can be available through the free access, like maybe in terms of capital structure, maybe in terms of so many things. So students can go for the free access.
Okay.
They do not require like Capital Line, Provis, or any other particular Provis.
Okay. So thank you, Dr. Miklesh. There's a
Thank you,
question
sir.
from Vibhu.
Okay. Now, Bivu has asked about adjusted share price data. One method is go through the Capital Line, but if you do not have Capital Line, it does not matter. Simply, you can go for the Yahoo Finance. So through that Yahoo Finance, you can get the adjusted share price data. And my first video is on how to collect adjusted share price using Yahoo Finance. So you can get through my YouTube video also. It is free accessible. Yeah, another question I have got from Supriya. Can you tell the source of authentic companies ratio other than Capital Line? Well, uh, apart from this Capital Line, I suggest you to download the annual report of the concerned companies. You can find each and everything, whatever you require in terms of ratio, maybe in terms of capital structure, maybe in terms of profitability, each and every variable you can find. A little bit time consuming is there, but no issue. You can free access that particular data set. So I suggest you to go through the annual report. Firstly, download this, make a folder, and then go through all the variables, whatever you require.
Dr. Miklesh, these annual reports will be available on the country's company's website, or BSc
Yes.
will be helpful?
No, company website. Each and every company, because that has been mandatory also. So each and every company on their website provides annual report.
Okay. So is there any link like a mandatory disclosure? Like colleges, they put a mandatory disclosure. In company, where they can find company's website?
Yeah. When one go to the website of company, some company directly in first glance one can find the annual report of 2017, annual report of 2018, it is clearly mentioned there. In some company, what happens, they provide like you can say different kind of blog on company itself, not blog, we can say that different kind of information would be there, and then if you click you can find there. But 99% of the companies, in first glance one can find the annual report of the company.
Okay. So I think Vibhu shared one, maybe he's telling that there is a link of investor area and there you can find. This is what Vibhu shared. Now there is a question from Shivani. She want to ask about how to quantify the credit rating of company provided by the agency.
Look, again, I have gone through the topic, impact of this credit rating on the firm performance. So now the question is talking about this credit rating. Majority of the company they provides, or there are so many rating agency which provides the rating of the company. One may be one of this may be one of the criteria. Apart from this criteria, I suggest to Shivani, if possible, you can go for the cross-sectional data also. But I think manually it's become very difficult to quantify the credit rating. There are literatures. I suggest Shivani to go for the literature in detail for this particular thing. As far as I understand, there are so many credit rating agencies which provide this, but for this one has to go in detail, like in terms of care rating agency, maybe in terms of crisis, they also provide. But apart from this, there are so many agencies which are providing the data. So better just go for this rating, and then you can go for the impact of that rating on the performance. Another question from Ajay. In case of event study, can you take CAR of 30 days window, or according to video we take CAR of, yeah, Ajay, in this case, there are so many literatures. In my video, I have shown for 2 and 5 days only for calculating. You can opt up to 30 days, you can opt up to 40 days, but maximum up to 40 days. Hello, Ajay.
There's another question from Shivani.
Yeah, yes. Now the question is credit rating, like AA, some company like B. So for this, generally what happens, we are supposed to give the symbol that if AAA, then give 1, or maybe like numerical parameter, only then we can judge the impact. Otherwise, obviously, we can't go for this the impact of this. Generally what happens, when any company gets high credit rating, their financial parameters are strong in terms of maybe ROI, maybe ROA, or maybe other parameters. So what happens, if you assume, yes, this is AAA, give the symbol 1. If that is triple, or maybe the B, or maybe the another category, then we can go for the 2, 3, or something like that. On the basis of that, you can assume this credit rating as like dummy variable in terms of independent variable, and then you can check against the dependent variable.
Sir, can we use assumptions like from D to AAA, we can give D to 1, and then in highest order that AAA will get 21 or 20 number?
Obviously,
like,
you can go. There are so many literatures. You are talking about the same. If you want, or if you like give, you are supposed to give the numerical parameter, whatever you want, it does not matter.
Okay, sir.
Yeah.
Thank you, sir.
Okay, so we got now almost 2 minutes. So Dr. Miklesh, I have one request. Will it be
Yes.
possible for you to take a session on how to work on the R Studio for this finance?
Of course, sir.
Okay, so today 2 p.m. I will take a lecture on R Studio. I will give them first year and the second year students a basic understanding of R, how to work on the R variable packages, the basic things I will tell. And then maybe at some later time we can schedule your lecture. Will it be possible?
Okay.
Today 5
Yes,
p.m. will be okay to you?
today 5 p.m.
Yeah.
Yes, sir. No problem.
Okay, so we'll just confirm it. The students have a WhatsApp group. So primarily it will be for the students of finance of second year, and if first year they are interested in. So you can share the screen, and then you can just give a very quick demo of the various things in R. And then side by side you can tell about YouTube channel also, and show the videos there. It will be really, really
Okay.
very helpful to us.
Thank you, sir. No problem.
Okay, so I will just confirm it after some time, in 5 minutes or so. And I thank you, Dr. Miklesh, for taking a time and taking the queries. Thanks a lot, sir.
Thank you. Thanks a lot. Thank you, sir.
Thank you, everyone.